Welcome back, Alpha Hunters. Hope you guys had a great week and you are not biting your fingernails off because it was a bite your fingernail off kind of week for Bulls and Bears, honestly. But we're going to talk about it, kind of get into what's going on, and we're going to think through what actually went on this week and do a little scenario analysis and look at possibly what's going on in the future. Okay, so looking here at the 15-minute intraday chart, and we'll just kind of walk through real quick kind of the price action was for the week, and we'll talk about all the major events as well. But if you paid attention to the week, Monday we started out pretty bullish, and we didn't really retest lower. Kind of thought we'd retest lower and then bounce. Tuesday we'd try a gap up off the CPI and then start trading lower. Well, I didn't get Monday correct, but I got Tuesday correct. I just didn't get the extent of what Tuesday's gap up really was. Tuesday we gapped up pretty large after we saw a pretty good run on Monday. And then we gapped up right over a very key level, right over 410 on the SPY. And this was a majorly important level to get above. And we'll talk about that here in just a bit. And then we just started to sell down for a good chunk of the first half of that day. And then we kind of just got in going sideways as then the market started to anticipate the next day. So the second half of the day on Tuesday was a little bit choppy. And then we started Wednesday. Started out pretty bullishly, started buying up almost immediately. And then we got to the release of the Fed funds interest rate hike decision. And the market dropped immediately. Kind of surprised on that. I kind of thought we'd have a little bit of a pop higher and then we'd start to roll over, but we didn't. We just dropped right away. And a big reason why is because they raised the terminal rate, and we'll get into a little bit of that here in just a bit. But we saw the market just kind of roll over, and then as Jerome Powell was talking, he's usually been more bearish, or the market's been more bearish when he's been talking at his press conference in the afternoon. But we did see the lows of the day actually put in when he was doing his initial press conference release. And then the market kind of rallied as he wasn't as hardlined while he was taking questions, right? While he was taking questions, he wasn't as a hardliner as he was in his prepared statement. So we saw a little bit of that volatility kind of pick up in the second half of the day, or really in that last hour or so. And then the day was over. That was it. We didn't get majorly back below 400. We kind of closed almost right at it. And then Thursday had a pretty solid gap down and then traded lower back down to about that 390 level, right? That 390 level was kind of one that we've been watching, one we've been talking about. And if we ever got back below that, you'd have to be real careful. So we got down to 390. We didn't see major buying on the 390 on Thursday. We just kind of traded down to it. We were a little bit below it and just kind of hung out right around that level, but we didn't see a major bounce. And for how much we'd moved bearishly from Tuesday to Wednesday to that gap down on Thursday, and the selling that we saw in the first part of the day on Thursday, to get no immediate bounce was really had to be a little concerning if you're trying to be bullish here. If you wondered if we were going to bounce on Friday, well, rest assured, the gap down on Friday killed any hope of that, right? We just gapped down. We traded sideways for a little bit. Then the first hour traded down for pretty much the first half of the day and kind of rounded out middle part of the day, tried to bounce a little bit towards the end of the day, ended the week a little bit of a selling note in the last 15 minutes. So that lets you know kind of the flow and the price action of the week. Now let's talk about what actually led a lot of these catalysts for the week. Kind of just shape up the week, right? We saw pretty good activity every day. Every day we saw pretty good activity. Now, if I was to tell you, right, coming into the week, let's think about this, that the CPI was going to come in at 7.1% over 7.3%, which was expected, you would think that we would gap up on Tuesday, which we did, right? On Tuesday, we had a very solid gap up. And if we check that daily, we gapped right above the high that we put in on December 1st. We put in a high on December 1st at 410 on the penny, okay? But on Tuesday, CPI came in a little light, and we gapped right over it, okay? So if anybody had moved a stop loss to right above that 410, if you're trying to be bearish and you moved that stop loss right above that day, well, you got snagged right there. And you got to really appreciate how methodical sometimes the stock market can be at just snagging certain levels and really finding where a lot of stop losses are. because that was pretty methodical, pretty surgical, little gap to right there. So then the other part is if I said, Jerome Powell comes out and then no longer raises interest rates by 75 basis points and is now raising them at 50 basis points, and he lowers that increase. You would think that'd be kind of bullish, right? That'd be kind of bullish. You would see some buying that would come in. Well, we didn't see that. We saw selling come in, and then we get all these catalysts out the way, and we just continue to sell down, right? So that was kind of what goes on for the week. As you kind of think about what happened this week, the two major catalysts, the CPI and the Fed, well, both of those went in the way of what the bullish crowd was wanting it to go, the way the bulls wanted it to go, right? We got lower CPI. It came in 0.2% lower. And then the Fed lowered the rate of increase from 75 basis points to 50 basis points. So both of those, the bulls were wanting, right? The bulls were wanting both of those events to happen. They got them. And yet the market sold off 7% from highs of Tuesday down to the lows on Friday, roughly 7.1%. That tells you something is going on in the marketplace, okay? Make no mistake about it. Do not overcomplicate this. This is a move that you should take seriously and expect further downside as we go into the next few weeks and months, okay? So we'll talk a little bit more about forecasting here a little bit later, but I just want to talk through what really happened this week and what the price action off of the catalyst that we got this week, what the price action was. The price action was a telltale sign of what is to come. So the other thing the Fed kind of mentioned and why you probably saw the initial drop right away when the Fed released its interest rate decision was because they increased the terminal rate by roughly 50 basis points. They went from like a 4.5% terminal rate to about a 5.1% terminal rate. So that was one reason why the market did drop initially. But I think a lot of it had to do with, it was just price action. You just saw the price action and people were, hey, you know what? This catalyst is now out of the way. They just started selling and it just continued. It continued for 4 days. And we didn't really see the bulls come back in anywhere. So that was kind of interesting to also see that there was no major bullish levels that really we hit. We just had kind of hit some pause levels. We didn't really see any major buying pivot levels. So we got a few things to kind of look at as well. And let's take a look real quick at the Qs. The Qs pretty much kind of followed the same pattern as the SPY did. But from their high down to the lows for the week, they were down roughly 8.2%. Okay, so from Tuesday's high and that gap up on that high to Friday's low was down 8.2%. That's a pretty significant telltale sign of where the problem area is going to be in the marketplace, okay? And on the Qs, you can see a pretty nice consolidation level right around here, around the 294 or so zone. And the lower ends of that like 279.5 type zone, somewhere in there, very nice consolidated range. We gapped up over it bullishly on Tuesday and then traded right through all of it throughout the rest of the week. So yeah, the Qs definitely not looking good. I don't know where the Qs get to on a bearish move that we're probably going to see on the market, but this does not set up very well for tech, and especially the biggest one, and we're going to talk about AAPL here in just a bit. Taking a look at the VIX. VIX obviously had a nice little gap up on Monday. Big reason why is we had a spike in implied volatility, right? Because we had a lot of major catalysts this week. We had CPI and the Fed, as well as unemployment and stuff like that. But once those events came out of the marketplace, obviously we saw the VIX come back down to where it was kind of in the previous week, or ended the previous week. And we're going to talk a little bit more about the VIX and kind of the relationship with what the SPY did this week. It was very kind of crucial. But the HYG Tuesday morning, kind of like the SPY did, gapped up, hit right into that 200 moving average coming down, and then traded down. Now, we kind of talked about that the previous couple of weeks. What if you get a quick move up to that 200 moving average, as it's just been in here consolidating? It hasn't really been participating so much in the rally over the past couple of weeks. And what if it made that quick move up to that 200 moving average? There it is. Hit it on Tuesday and then just continue to trade lower. This is going to be something that you're going to want to definitely watch here over the next few weeks. But the HYG definitely making that move, kind of confirming what the market was doing this week on the HYG. So looking here at the yield curve inversion between the 10 and 2 year, what is really interesting here is obviously we can see a massive downtrend here on the yield curve inversion. But what was really interesting, we kind of noticed here today, or really what formed out today, was a possible head and shoulders pattern playing out here as we broke above the neckline today. So it was real interesting to see that. Now, it wasn't a massive breakthrough. That neckline would close just above it, really kind of towards the end of the day. But if this is the bottom on the yield curve inversion and we start to see a massive run here on the yield curve inversion, that could be the massive selling that we do see come through in the stock market, because whenever the yield curves start to make the move back into the non-inversion area or getting back into the positive, or we see that run to not be inverted anymore, that is when you typically see the stock market get hit the hardest. So this is definitely going to be something to watch here over the next few trading days, as if this pushes higher quick, we definitely might start to see the stock market really sell off here as we get into 2023. Okay, so in looking at the Qs, we've talked a little bit about, just a lot of consolidation here over the past month. That gap up Tuesday, taking out some of those previous highs over the previous couple of weeks, and then just the massive trade lower. And one of the big reasons why the Qs haven't really been participating so much in the bullish run is obviously a lot of the big tech names that are in the Qs that have a massive weighting. But the biggest one, right, is going to be AAPL. And you can see just how much the SPY has been on a bullish trend over the past couple of weeks, or the previous couple of weeks, past 2 months or so. And then you can see the Qs not really participating so much in that. And a big reason why is AAPL, right? AAPL hasn't really been in a consolidated zone so much, or even been bullish over the previous month or so. It's been having declining highs. This is something that I've been talking about. Apple, it might be one of the best bearish plays opportunities really since August. And I've been playing this off and on in the bearish direction for a while now. But this is setting up really well. And one of the reasons why it's setting up so well, I'll put this in the middle of the screen a little bit better so you can see it, is we broke the November and October low today, okay? And you can see the massive amount of volume that came in today, but the fact that we didn't really close and we didn't see a major bounce off of breaking those lows was very interesting. If we want to take a look on the intraday price action, it kind of just hung out down there. This is when we were breaking down those November and October lows, and we just kind of hung out. We didn't see a major bounce reaction or anything. It just kind of hung out down there. And even towards the end of the day, it started to run, and then at the end of the day, it just kind of even got sold back down into that price level. So it was really interesting to see this move on AAPL this week. And AAPL was hit really hard this week after that Tuesday gap up. I'll just show you how much of a move this was from the Tuesday gap up to roughly right there, 10.8% down. Dang, that is rough. That is rough. That's the largest weighting on the S&P 500 and the NASDAQ. They're going to go as the AAPL goes. It's going to be very hard, very difficult to be bullish or be non-bearish or sideways if AAPL is not moving in that direction, right? So they're going to kind of follow AAPL. And if AAPL starts to really lag on the market, that's going to put pressure on a lot of other stocks out there, because they're going to look at AAPL and say, okay, that company's getting hit. They're the largest weighting. I'm going to start to sell other things. But this is a big reason why you need to be checking out AAPL and watching the stock price here. And I don't know if I'd get bearish right now on AAPL. Either it's going to come down to 128 next week and start to bounce and chop around in this zone between like 128 and 129 and possibly like 134, 135, kind of where it's at now. But I would imagine it probably just gets in here and consolidates here for the next couple of weeks, maybe even early January, before it breaks down this 129 level. And yeah, I don't know, maybe it bounces early this next week and maybe retests into 140. That also makes some sense. But man, you just got to really hate this move if you are trying to be bullish here on Apple, because this was like by far one of the biggest laggers in the marketplace. And going forward, if Apple breaks down its yearly low that it put in back in June, especially if Apple breaks that down before the Qs and the SPY break their yearly low that they put in October, I would be real careful. But watching AAPL right now might give us some very clear indications as to what is expected. Okay, so I want to show off real quick, the S&P 500 and the orange line that you also see on here is the VIX, and kind of what happened back in '01 before we saw the major drops in the marketplace, right? So we saw a pretty good little bullish run. This is kind of the similar to a bullish run that I think we've kind of been in really since mid-October to probably the high we just put in on Tuesday. And what's really interesting is during the beginning of the sell down, during the next bearish move on the marketplace, watch the VIX. The VIX actually was not responding in the beginning at all. And what's really kind of important to see is we got pretty well into the move before we saw the VIX start to move back up. And then we saw the market really start to accelerate back into that bearish direction. This is kind of interesting to see because as we go look at today and what happened this week, well, really, we saw a move start to take place into the bearish direction, and we didn't really see the VIX kind of move up into the bullish direction or higher. We didn't see the VIX move higher. We kind of just saw it kind of just hang out. Now I know Monday, Tuesday, the VIX was kind of elevated, and a lot of that had to do with implied volatility just being higher because we had CPI and the Fed this week. But outside of those 2 days, the VIX didn't really do a whole lot. And so if we start to just slowly chop around and just break down a few days and the VIX isn't respecting it and the VIX is just kind of hanging out, it might give us a little bit more of an idea that it might be a longer lasting move into that bearish direction. So really kind of keep your eye on the VIX here. If it doesn't really respect the bearish move that's kind of going on that we started this week, it might be a longer lasting bearish move than possibly just breaking below the October low. So just keep that in mind, just keep an eye on the VIX. All right, so kind of the expectations maybe going forward here. Well, we're about to head into Thanksgiving week. Well, really the next 2 weeks, really Thanksgiving and New Year's, or the lead up to those kind of holiday events. So I'm not really expecting a whole lot, but I would definitely keep an eye on the market. I wouldn't say it's going to be volatile as this week, but maybe a retest back down to maybe in like 380 or the upper 370 area. I would like to see the market retest into 390 and before it pushes back down and continues back in that bearish direction. But if we do see a quick retest maybe this week of 390, I would definitely be looking to sell it. I would not be looking to buy it. And if we do push a little bit over it, maybe like the 392 to 394 type area, kind of where some of these lower wicks were on some of these days throughout the second half of November and early part of December, I would be looking to sell it. I wouldn't be looking to get in bullish or trying to ride it back in the bullish direction. I think we'll be going bearish for a little while and probably be bottoming sometime in February, but definitely be watching those signals, the Qs breaking down, Apple part with that as well, the VIX and the HYG, and also that 10 and 2 year inversion. Those would be some very key tells. If they continue to move in directions that say the market should be bearish or expect the market to be bearish, especially AAPL if it leads to the downside. Yeah, I mean, there's nothing you can really do. Like the market gave you a very clear direction this week after the catalyst events were done and over with, and we saw a whole lot of selling come in, especially after that Tuesday gap up, right? So we got that Tuesday gap up off of a bullish CPI. The Fed came down on the interest rate hikes to 50 basis points, should have been bullish, and the market just sold all of it off. We broke the channel into the bearish direction that we had been in for basically about the previous month. So there's not really much else to kind of tell you. I would look to sell any kind of rip if you could. You need to be protecting yourself. If you say you're going to ride it out, okay, fine, then ride it out. But I would not be looking to be bullish anytime soon over the next couple of weeks, next couple of months. It's probably just going to be a little bit painful if you're trying to be bullish. If you're going to ride it out, you're just going to have to ride it out. But really, that's kind of my take on it. Just think about the scenarios that happened this week, the kind of data that we got this week, and then what the price action was. The price action was not bullish. It was not bullish. Even though some of that data that we got this week was kind of bullish. That stuff was kind of bullish. And one of the things about the Fed raising that terminal rate, or the max rate they think they're going to have to get to by 50 basis points, right? They raise it from like 4.5 to roughly 5 or 5.1%, is that kind of put a hamper on anything the bulls can do, right? Because if data doesn't come down as fast, well, then they can say, oh, we're going to raise interest rates more. But if data does come down fast, or kind of at the pace that we've seen the past two CPIs, where the CPI numbers have come down a lot harder, all that means is we're steaming right into a recession. So the Fed really kind of handicapped the bulls this week. And to me, that was probably the biggest note of the week, was the fact that the Fed really kind of handicapped the bulls, right? There's really no scenario in where the bulls win. So I'll leave it with that. But guys, y'all have a great weekend. Hopefully you get all your Christmas shopping done, and I'll talk to y'all next week. Alrighty, take care, elf hunters.